Hello, hello, hello. Good morning. Good morning. I make a silly mistake. Uh, my my stream didn't have audio. God damn it. That's crazy. I'm so sorry about that. I'm really sorry, but I was speaking. I was speaking like for 30 minutes, not like 1 hour, something like that. And I did not, I did not have audio. God damn it. I don't know why I didn't have audio actually, because everything was my microphone was on. I was just so focused on the market, and I didn't realize that. My apologies. I apologize. You know. But I was talking earlier. You know, was that this in general? Was that this? Everybody knows now the market is going lower, right? The market has almost completed the trade to the downside after the look above and failure of this 5-week range. Just a second, please. This dog is bothering me here. Alright, the trade to the downside has almost been completed. Look above and fail. Targets the opposite side of the range, but first has to deal with this 2-week range. It traded through, and this low is very close. Now, the most important thing, monthly, weekly, daily are in sync. All of them are going to the downside, right? All of them are trending lower. And this key level here, the 50, the one that I have here, it's right there. No, wait a minute. There's something here. There can be something here. There's a huge amount of volume here. We were talking how if the market takes this low here, we have a 13-month range here. Right? The weekly was the time frame that was the cleanest one. The cleanest was the weekly. And I kind of made me realize that these participants were the ones that were having control, conducting the trade in the past months. The daily was very erratic as well, and apart from adding to the fact that all time frames now are in sync and trending lower, this reference is common. You have this 4350 down here. It's the same you have here. It's the same we have here in all time frames. There was a couple times that happened before that I remember. No? It was somewhere in here or down here. After when the same reference, all time frames were in sync, and the same reference was there. We have just a huge break. Because everybody's looking towards the same thing. The retail, smaller, daily, weekly, and monthly time frames. There is a 7% range, 7% level here that coincides with this level as well. This is a non-existent gap. This gap is actually not a gap. This is just an adjustment that TOS makes. The same kind of gap we have here. This gap happened. The market went to sleep today, and it's like just close the market right now, and open in the next second. Like nothing happened, right? Nothing happened, but because there was a new contract, there was a rollover. You have a gap here, just because of that. About 50 points gap here, and another like 30% gap down here as well. That's the bigger picture of this thing. Right? Now, the volume, the big break that we have yesterday and before yesterday, look at that tremendous. I mean, come on, brother. Look at the volume the market has. Really low volume. Really low volume. Which tells me, right, this is a indication that there are good odds that this movement to the downside the market is having. It's just a correction of this long inventory. No long inventory being corrected, rather than a more heavy, potent, or serious activity, which would be selling from bigger time frames. That's not happening. This is more like a correction, at least until now, at least so far. Now, it remains to be seen what can happen with if the market re-enters this range, this 13-month range. I have these levels marked here in my daily. This is a breakout of this range here, 4 or 5 something days. This is the low. This 2350 is the low of this. And almost, another 50 points down here. Huh, interesting. No, my bad. It's 25, it's 20, something like that. In the weekly, I have this 25 here because it's the breakout of this level here. We have a breakout. And the 27, which is basically the same, is a breakout in the monthly as well. No, actually, this is the same. And these levels, I have these levels in my chart, in my market profile chart. I have it here. I have a 4-week range low, which is August low as well. So, and down there, this 13-month range high, this is the one. August low is this here. 4-week range low is this one here. And I have all them marked here. The same reference, all time frames have the same reference. Now, everybody knows the market is going lower. VIX is being adjusted as well. I think VIX is 17, 16, something like that. How much is VIX now? 1675, almost 17. It was 14. It was unbelievable, unbelievable when it was 15 down here. A really nice, really cheap market. And when I say cheap market, it's opportunities. The opportunities were really cheap. The risk was low. And notice where this selling came from. You have this trend line here that started to form. You can see this one better in this time frame. Right? You can see better in this because you have more days here, and just see it was very obvious, and then have a breakout of that, and then fall back inside. And what caught my attention is it was sold. The next time, this day here, it was sold from. I mean, I don't have it here. I have erased this. I guess, let me see if I have it here. Well, it is this one. It was sold from exactly from that level. And yesterday, I was talking about, I have conflicting thoughts, with what I see versus what I feel yesterday. And unless the market showed its hand somehow, I wasn't going to do anything. And the market, it was unbelievable. But it happened so fast. The market showed its hand right away, because right at the opening, because the market had a gigantic gap, and we have this I was paying, I didn't realize this 2-week range was there as well, but I was paying more attention to this July low, and the market couldn't take this level out. I say, wait a minute, there's something here, and that was short. And what is it? Your stop is, my stop is just one tick, a couple ticks above this level. That's it, right? I wasn't willing to go to give anything else to the market, because that's a structural level. And what happened afterwards, it has gigantic volume, lots of volume here. And the particularity from yesterday, I have these levels here, and the market was kind of being forced its way to the downside. The market didn't have it to the downside, but when the market, with these big volumes, big blocks of volume appear, the market just have these spikes to the downside. Now, this is why I question. Let me see if I can open again, because I think this is very important. When I have these volumes, big volumes here, 1400, 1,000 contracts, 600 contracts. If somebody can buy 1,000 contracts or sell 600, I don't know what that is. I don't know if that's sell or that's buy. I don't know. But if somebody that has that power to put 1,000 contracts there for me to see, I question that. Right? I question that, because if I am going to be doing something, I don't want anybody to see what I'm doing. Yeah, that's how bigger money trades. I don't want you to know what I'm going to do. If I have a power to put, certain huge amounts of money out there, I don't want you to know what I am doing, because what will happen is if I have these big things, you will see what I'm doing, and what you will do. Have you asked that? What you will do is, you will try to upfront me. You will try to do what I'm doing. You will try to go in the direction I'm doing. And my entry, I will have a lot of slippage there. That's what I question these things, right? Per se, but traders, small traders, don't think that way. Okay, they see pressure here to the downside. I'm going to go to the downside. The market is breaking. There's big volume. There's institutional money buying or selling on those levels. There's icebergs or whatever. No, BS. That's all BS. It doesn't matter. Right? That doesn't matter, really. Now, look at this. What is happening now? Look at the amount of money, the amount of contracts we have here. 20,000 here. The market took this level out, this area out. Right? It doesn't have taper. It does have taper here. It doesn't have excess. It doesn't have taper on the upper side. And notice where this selling is coming from. If the market cannot close this distribution, that's a trade as well. And my focus at the opening was this spike base here. The spike base, the rally high, and the lower side we have this 43.50. Why I am so focused on the spike is because the spike is something that happened late in the session for the market to confirm or reject that movement. In this case, the spike was to the downside. But it happened so late I cannot confirm. And when the market opens, this is what we've been talking. I was talking to myself here. And if the market opens up here, it signals that this spike or these lower prices were rejected. The market doesn't care about these lower prices. If the markets open below the spike, okay, there's acceptance of these lower prices. But the hardest time I had is when the market opens inside the spike, because that's neutral. It doesn't signal anything here, no acceptance, no rejection of lower prices. And that always have been a situation where I have struggled the most. The readings I have tend to do are hard, and biggest losses can my biggest losses. I didn't have good times there when that happened. So I just let the market. I was willing to let the market settle here. Now the other thing, overnight inventory is long. Notice where seller is. There's some trade below, but most of the action happened above seller, which puts the inventory in the long side. All of this overnight trade is in the long side, or most of it at least. With a very prominent point of control. It's a very prominent because it is very wide relative to the rest of the profile. Right? And market did a counteraction, but it didn't take this low. It doesn't have it yet. The situation today is different than yesterday. I hope you have noticed that. Now everybody knows what's happening. Everybody knows the market is going to the downside. Everybody knows we are going lower. Another market is going to go to 2,000. The ES is going to go to 0. Okay, I want to be sure. Now I have missed this movement. I have missed this one. Now I know. I'm not going to miss it now. Okay? And the mindset has changed on a lot of traders out there. Okay? The opportunity, when notice this thing. Now we were talking about how low the VIX was weeks ago. If we have trading as any other business out there, because trading is a business, have opportunities. And as in any other business, when you are absolutely sure that you have an opportunity, when you are 80, 90% sure that this is a good opportunity, that usually is a sign that the opportunity has already passed. A good opportunity is when you have 60, 65, maybe 7% odds success, right? That's good. That is a good opportunity from my point of view. Whenever everybody knows, then just like the saying. I guess I don't know where I hear this. Whenever everybody is special, then nobody is. I guess it was something incredible. It was incredible that the animated movie. But I thought that's a really good thing, right? I feel silly now, recording those things. Okay, Mike is making an attempt to close these distributions. So this is a structure. Now, on A, I didn't have a structure. How will I know I'm going to be short, I want to be long in this market? I have no structure here, nothing. There is something here to the upside. Why to the upside? Because can you see what the market is doing? Market is high, it's going higher. Volume is low. Another thing when volume is low is I hope you have noticed this. When the volume is low, the market, whatever, especially Fridays, it tends to do a movement, either to the upside or to the downside, but it grinds its way to the upside or to the downside with this amount of volume. But really low. It's always relative to something. Right? In this case, it's relative to yesterday. Relative to now we are back in business, low as usual. If this thing continues, it will end somewhere around here. Very low volume. Very low volume here. Now the high is not good. Good odds that high is going to be taken. We have poor high. What we have yesterday, or before yesterday, we have extremely weak highs up here as well. Here at this high. Uh-oh. Now the distributions have been closed here. If I am long, I don't want the market to come back inside this range. It has already came back, right? It came back to this. But that's the thing here. From this day, look at non-excess here. 4, I would say 6Y, 3Y here. This is exactly at the 4,500. That's just the inventory is in the hands of the weakest traders. There are. On top of that, everybody knows the market is going low. Everybody knows we are going to break the low. Right? It's very what I see here is contradicting information here. The distribution has been closed. The spike has not been taken yet. The market is still to the downside. We have one time frame higher here from the opening. Very low volume. Very low volume, very narrow ranges here as well. The 4400 is also POC. Every single level, no? From yesterday. Can you see these high volume blocks we have yesterday? You know, that feeling that we have yesterday, that it was just a push, somebody was pushing the market. The market didn't have it yesterday, but there were these big blocks that keep pushing the market, you know. And as I say, you know, if I can see what somebody's doing, I'll question what I see. All right, the spike has been taken out. structure, right? The first structural level here is the distribution closed. This is a place to go long or a place to go short. If I take a short here, if the market comes back and takes this short and take this level out, that's where my stop is. The reason why it is there is because if that level is taken, it represents change in the market. Something has changed in the market, right? If I decide to go long here, for example, short here, which is what happened here, we got a big pullback here after B. The market is still inside the spike, and having a selling here. If the market takes this distribution, it represents change, because what happened with the market if the market takes or closes this distribution is the market targets this opposite side, targets the opposite side. What do we have here is volume from these areas. We were talking about this. I was talking to myself here that the characteristic of these areas are very narrow areas. It's different when the market has, instead of having that wide, very narrow, we have something like this, or like 2, 3, or 4 hundreds range, which is accumulation, but very narrow, very focused, right? And these are focused, or were focused mostly on these high volume levels. What I call high volume blocks is, for example, I have somebody who bought 300 contracts. This may be six trades, 50 each one, for example. If I have it here, I will have above 150. You have 300 hit, probably two trades, 150 each one, or maybe one trade, 300. I don't care exactly how much. It's just a reference. Right? Those ones are these levels here. This one, and this one, and this one as well. Okay. Notice the huge accumulation volume. The market traded through, removed these ones. Whatever happened, maybe the longs were removed here and then keeps going. And what happened afterwards? Low volume here, low volume so far. There's nothing here. There's nothing here. And remember, these things per se don't mean anything. We have to put things in context. Now, if you look at the current profile, we already have two distributions there. Can you see? You already have this C low, hasn't taken A high. So this is one distribution on the upper side, one distribution on the lower side. That's sideways motions as well. Very emotional. And I notice also the volume we have in the overnight, almost 400,000. So far, not even that, or about the same as the overnight, right? We are into the third period, half into the third period. Usually, the first period has, if not as much volume as the whole overnight. That's why I don't consider overnight the action of the overnight that can repair any level, any weak level, for example, from the overnight. Now, there was a weak level yesterday around the spike base, which was this L high, which was exactly half back. This C here is just adding to that level. It doesn't take that much. I didn't see a spike going up here. This is, still, there is still stops here about this. And now we have these stops here from this one, this C high, L high, and K high as well. So there's accumulation there. And look what is up there. Oh no, but everybody has this mindset now that we are shorting. We have to be short because the market is going lower. Everybody knows the market is going to go lower now. When everybody knows something, the validity of that information becomes rare. And that's another reason why, when you trade a market, you just trade your market. I don't trade the ES, which is my market, based on what's happening on NQ. If I was the only one who can see a divergence, for example, the AQ is running higher and ES is, come on, the ES is breaking. If I am the only one who has that information, that would be valuable. But if everybody can see that, then it loses its value, its relevance, its importance. Another time the C has come back inside B. No? But I rescue from this action what's happening now. First the volume, then the spike, the base of the spike has been taken. I will see what happened with value now. What happened with this distribution as well. As long as this distribution remains, there could be something to the upside. It's not unusual to see some rebalancing here, especially since we have Friday, we are at the end of the week. We don't have anything next week. We have CPE on Thursday, I believe. Let me check that again. Core CPE. Oh, Friday. Friday we have core CPE. Friday we have CPE. I was saying it's not unusual to see some rebalancing here. Yeah? My focus, my midterm, I would say my midterm focus is this low here. Now let's check the bond market. Why I check the bond market? Because it's a historical lows here. Oh, the market, this bond market is recovering here. Not before making a new low here. Notice we have a gap. We have a tremendous gap. Let's check the daily. Traders are hyper focused on this one. Oh my God. This was a support. This level 220. Notice where, come on, man. Notice where it's been, where this market is being sold from. It's been selling from. This level, it was support, now it's resistance. And the gap just above. What about the 30? The same principles that we use to trade the ES, the same, it's not for the ES, right? Because this is a business, this is trading. It's for everybody. I don't know if I have said this thing in this stream or the previous one. Let me know here. I have already said trading is a business, right? And as in any business, there's a lot of repetition. Whatever you do, whatever job you have, you will do a lot of repetition. Trading also has a lot of repetition, but it has repetition with variation. I used to do a remodeling job. I used to do some carpentry, for example. Right? I do acoustical, serious carpentry or electrical. And the first time was kind of hard. Right? I got the fundamentals, but doing it takes some time. Then the second time is easier, and the third time is easier, even easier, right? And it becomes more easier the more you do it. The more you do the same thing. In trading, there's a lot of repetition, but there's repetition with variation all the time. our minds play tricks on us because we tend to believe that what happened yesterday or what happened a week ago will happen again today, again today. In the same way, there is this repetition, but it doesn't happen the same way. There's always something different. Because I have this from Nicholas Taleb, right? For in trading, in markets, for the same thing to repeat it the same way, exactly the same way. Oh, notice how volume is appearing here. There's some accumulation here above the distribution. You have 10,000. See, this has nothing, but this one. Notice this. 10Ks here, 20s here, and have 10Ks here. Just above all these blocks from yesterday. All right. What I was talking, God. Oh, Nicholas Taleb, right? For the same situation, the same way the market trade last week is going to trade this week, or that day is going to trade this day exactly the same way. It is impossible. Yeah, it is easier that a light lightning hits you 3 times in the same spot. In 3 different months, right? In 3 different times, because the participants of the market, there are thousands, millions of participants, the components that make the market. You, me, you and me, and other traders, bigger time frames, investment money, hedge funds, hedging, investing, a lot of activities in, and for the same thing to happen, to repeat itself, all the participants have to have the same interest, the same mindset, the same information, the same background, right? The same bias, the same, everything has to repeat. And the odds for that to happen are close to 0, are infinitely slow. It is super slow. Super low, right? You can call it 0, that happen. For practical purposes, is 0. There are no 2 days that are trade the same. But there is a lot of repetition. There's a lot of cycles that happen in the market. We have the daily cycles, the intraday. We have these periods, right? We cycle here. The auction now is to the upside. Auction now to the upside. The spike has been rejected. We have another spike. When the market takes the previous period low, that would be the end of the upside action, and another cycle starts. And this time, in this case, it's another action in the intraday. Then we have the daily, weekly, and monthly. Then we have the contracts. How these quarters. Then we have seasonality. We have elections. Then we have yearly cycles. We have a lot of things. The more cycles you go through, the more you will see. You can experience these events, and the more repetition you will have. If we have 2 years or 3 years in the market, we would have gone through only 2 yearly cycles, right? And the edge is inside of the traders that have more time in the market. Acknowledging that is important as well. It's very important. Now, look at this. Look at this tremendous amount of volume we have here. 2,500. This is good here. Let me label this thing. Why is per se high volume blocks means nothing, okay? It happened at 90. Where are you? Son of a bitch. This is in C. It's happening in C, and today is 9:22. Okay, What is this? Is this long? Is this short? I don't know. 920. Okay. 920. This happens in C. And we are 922. 22nd. The 22nd. Okay. Why I have come on. What can be my reading here? We have all of these contracts below, here. We have 600, 600,000, something like that. About 2,000 contracts traded in these levels, here, and here. And now it's happening above that one. It's happening above. It is either there is something that's happening here. Let's add into this, and now we're going to the upside. Which one is going to be? I don't know. No? If I knew what that means, I would be long, huh? Or short, or whatever. But nobody knows that. Now that's what I want to understand. Nobody knows that. You know, or we know just after the fact, after it has happened. Right? Just after it has happened. Not before. Oh, look at this, man. Really low volume. Man, this market has a really low. Come on. What the market is doing is going to the upside, right? Look at the volume here. It's decreasing volume. But the situation of the inventory is long. I mean, it's very short. It's very short. There's a lot of supply. There's a lot of supply here. The spike has been rejected. What that's going to be, I don't know. A structural trading will have a stop here. No, here. Closing these distributions. If I want long, I tried a long here. I just crashed the trade here. The market took this B high because it closed the distribution here. I expected something to the outside, but it just, no, there's nothing here. All right. That trade here. Did you see how it went to the upside? That's the push the market is doing. Now another contract here. Look at that. Just look at. Did you see how? Did you see what we have here? It was 750 first, and now it's in one trade. What happened when you have this contract? The 750 appeared. It went to the downside. Okay. So there was some selling here. That big contract was selling. What it matters? It doesn't matter. I can focus on that, or I can focus on what's happening with the overnight, with the yesterday's inventory, which is very short. Now let's check, rather than checking and focus on minutiae. The market has lots of volume here, especially this area here has a lot of volume. Come on, all the way. This area here has a lot of volume. From the, okay, come on, no way. From the 400 to this area here, rally high to 40. Very technical trade here. I mean, I think this is a good market for options here. Why I say options? Because it decreases your risk. If you have a call when the market took this high, for example, market make back and forth, back and forth, back and forth, back and forth, back and forth. Your stop, my stop is this low here. The market closes this, then I am up. Doesn't matter what, I am out here. You know, and this that call gives me some, it gives you some allowance, some tolerance, for the market to do what it needs to do. This is incredible here. This is incredible here. Goddamn, 94. This is crazy, man. I love this. I love when I see these things, like how the trading happens. And this one, just, what is this? C again, right? C 922. This volume here it's bigger than yesterday. Came to take this one from yesterday. God, this is nice, man. This is really good. Love this shit. Love this business. This is a really good business. Today I see a lot. I mean, even though the action is very slow, it's grinding. I saw a lot of things happening here. Very subtle. And the thing is, look at this this market. The market is going to open here. The next period is going to open here and half back, which is not a good level to be, for example, to be short here, right? Because good also market is going to come to the upside. I don't know what I was talking. I was enjoying this. Oh, what I was saying is this. Everybody knows the market is going lower. Everybody knows the market is going lower. Now, you're short in this market, and you will see your trade. You got short, and you see your trade just, slowly grinding its way to the upside. Grinding its way to the upside. And you will think, okay, this market is going to break. This market is going to come back to me. This market is going to, we cannot keep going higher. The market is going to the downside. I know the market is going to the downside. I know it will keep going lower. All right, and you just keep your tail, but slowly keeps dripping. These contracts keep coming and market keep going, and you don't close until you are well underwater. That happens in both directions. Both ways. Now that's a strong rejection there. Now where the buying is coming, the selling is coming from half back. Oh my God, that low is no good. Oh damn. It's that low. Why I say it's not good? Because it's overnight high, and it's also C half back. Repairing, and oh come on, this is another distribution here. 1, 2, 3 distributions. God damn it. Very emotional market, even though the action. Closing this distribution. That's not good. Puts this low as a potential destination. No, this is not good. Very mechanical. No good here, no good here. Look at this, man. Look at this. Huge accumulation of volume here. Big blocks here. When I see these in a trending market, this usually is a sign that the auction could be coming to an end. Now the market is inside, has penetration into yesterday's value area. The 4400 is right there as well. Oh boy. Look at this. How volume is accumulating in the lower side here. Now, from the previous period, have a lot of volume here, nothing here, lot of volume here, right? And not just that, but blocks, big blocks here. I don't want to see this market. If I am long here, I don't want to see the market trading through this area here, because trading through this area, all the longs here will get nervous and may be forced to liquidate. This is fantastic here. All right, it's 11 a.m. Unless there's any questions, do you have any questions? Wish you a good rest of the day. Stay safe out there. Enjoy your weekend. Bye-bye.